Hello, everyone. This is Brian again, the Rational Investor, bringing you your Bitcoin summary for Friday, August 1st, 2014. Been having a bit of a challenge with Google Hangouts and working with Chrome lately. And someone suggested maybe I ought to try a different browser, and sure enough, after trying a few different browsers, we were able to overcome the problem. So, only after a couple of days absence, I apologize to everybody who follows me. Try my best here to keep you up to speed. So, this is your free summary here for Friday. It's evening. Better late than never, eh? It's about 8 o'clock here on the west coast of North America, well into your day Saturday in Asia, and probably actually just starting your day for Saturday in Europe. So, anyway, enjoy this information. Use it as you can, and by all means, if you are interested, you're more than welcome to pop on over to the site, therationalinvestor.co. Check out all the different things we've got going on. Our school is in full gear now. We're into week 5 of the program, so really just kicking butt there. As I mentioned before, you can watch detailed in-length videos that are like 30, 40 minutes longer in the Crypto Live Room. My daily blog, where I usually squawk about what I see on happening on the charts there, and I'm posting quite a bit lately, so actually it's getting quite a bit of traffic, so that's good. And you can learn a little bit more about me and what it takes to get started trading Bitcoin. So, all right, let's get to the analysis. Get my stopwatch out. Got to make sure I don't go too long here for you guys, and we'll start. And just so what I think is prudent here is for the daily video for you guys, we'll do sort of the higher time frames and then maybe talk a little bit about what we've seen in the 4 hour. And then, if you want to drill down and really talk about levels on the 4 hour and lower, then, you got to come over to the pay site. So I think that's probably the best thing to do here. So once upon a time, big rally, interesting Silk Road. It's very interesting too how it's postulating about big inverted head and shoulders and a need to come down into the OTE. And the reference point that we're making, that similar action, was this Silk Road event that took price down to $75. And that's sort of what we use as our base to start this latest bull run. So $75 low all the way up to the 1100 high. Not a big surprise. We saw price come back down into what we call the optimal trade entry, or OTE, which is between 61.8 and 78.6 fibs. And you can see each time, this was a funny fat finger trade, and it was very, this is, I suppose, one of the dangers of trading non-regulated markets, is that you can get sort of these fat finger moves. And I remember when it happened, everybody got all excited, and it was just quickly reversed. So I'm not quite sure how to interpret that on the charts going forward, but it should be an interesting lesson. Anyway, any serious moves in earnest and on volume, you can see that they turn through this OTE zone. So it's really valuable information if you take nothing away from the videos. And that's thanks to Mr. Inner Circle Trader, Michael Huddleston, excellent teacher. He uses this in his Forex work. So if we see the OTE long zone, we could probably take the same sort of philosophy and just flip it over on its head. And that should give us a pretty good idea of where the short zone ought to be. And you can see off of this rally peak down to this low that our short zone is anywhere between about $800 and $900, even a bit higher than 900. And it kind of looks to me like that's what the market kind of wants to do with this ABCD pattern that I've drawn on the chart here. And really, that is all predicated on these recent key lows at 554 holding. If they don't hold, then the bear starts to take over in earnest, and we really do have to start talking about these big, ugly downside numbers. So it was very interesting to see the latest price action. Here is that trading range peak 668, and really the rally itself wasn't a big surprise. It came up to some important fib levels here. 38.2 is my first stop target. 50% level 665. That's Mr. Gann. As a year-to-date 50% level. So we consolidated, came back to 38.2. There's that 545 and the 38.2, 543. Now the interesting thing is if you draw a trend line off of this peak and this low, it actually makes the trend line lower than these lows. So we're still very much vulnerable to washing these lows. But it was really, really interesting to see the price action heading into the test of this low here. We had the bear ABCD that I was squawking about. Its target was hit. We had a smaller bear ABCD on the 4-hour. That's this red line that was trying to be hit as well, and ultimately was hit. And then, as we got closer and closer to this low, the irony of it all is that as range traders, you basically want to be buying against these lows, and you say, I'm going to risk down to this low here, below this low here. And really, I might even say, risk below that 38.2. So if you had the balls to go in there and place your bids at, what was this low here? 555.01, so 555 and a quarter or something like that, and say I'm going to risk to 543. Yeah, it's $12 a risk. Maybe 542, $13 a risk. So you'd want to get $26 of reward. So from 550, what did we say? 555 and a quarter, 556. You'd want to see 570, 580, and here's our rally. We hit a rally peak here of 598.50. So, that's a fascinating testament just to range trade strategy setups where, I know lots of guys, in fact, they call this up thrusts and, what was the term for the tops? Anyway, that was a couple trading buddies that I used to trade with crude oil with. They used to use those, and that's what they call that. They call that an up thrust. So really interesting to see that all we've done is just rallied right back to these moving averages and right back to this significant trend line. And if we looked at the 4-hour off of this entire range, we just rallied right back to the 38.2. So it's perfectly natural, perfectly normal, nothing really unexpected here. The question really was the market going to break these lows? And if so, what would happen afterward? Well, what was really fascinating about this event, and you can see that, this is a 4-hour chart, so that's over 2 full bars. They repeatedly tried to press those lows. In fact, they even took it down to 505 or 555.00, one tick below that previous low, and you can see the bar here. They just ran out of sellers. They just literally ran out of sellers. And so what I've been suggesting to people is I think that whoever engineered this move down took a lot of effort. And, this is this big fat trend line, so we're moving away from it. We're building divergences. Really hadn't quite gotten stupid, but, pretty low. And if we look on the lower time frames, you did have divergences that came in. So not really a big surprise. We rallied back up into this 38.2. Not a surprise whatsoever. The question really now is, okay, now that we've done this counter trend rally, back into resistance, back to the trend line, back to the 38.2, what do we do now? All right. And so that's really the focus of the next video, which is on the pay site. You're more than welcome to pop on over and see if you can use those levels. Hopefully what I've talked about here today can help you. I think there's a lot of really good information, and I want to keep it relatively short and sweet, so I think I've done a good job giving you an idea of what I'm seeing in the market. All right, guys, have yourselves a great day, and we'll talk to you tomorrow. Bye now.